Morning, everyone. My name is Tyron Breytenbach. I'm SVP Capital Markets, and our CEO, Neil Woodyer, sends his regrets. He's hard at work down in Colombia with the troops. So Aris Mining is building a new gold-focused Latin America producer. We're a growth-focused company, and we feel like there's a void in the sector for this type of company following some recent consolidation. So the four pillars of our strategy are, first of all, growth. We have 4 assets, each of which on its own can do 200,000 ounces a year. These projects are becoming more and more rare, and we have 4 of them. We have a fantastic balance sheet as far as a gold issuer goes. We have $320 million in cash right now. All of our assets that are in production are generating positive free cash flow, and we have another $260 million coming in from our streaming agreements with Wheaton Precious. So we're not at the whim of the external market. We are fully funded to execute our business plan. The third pillar of our strategy is our team. So while you might not recognize me, I'm sure you have heard of Mr. Ian Telfer and Neil Woodyer and Peter Maroney. These are gentlemen who are not just good at running mining businesses, but they're very entrepreneurial. So we have a buy and build strategy. We've done it before. We know it works. And if you invest in Aris, you are co-invested with these titans of the mining industry. The fourth pillar of the strategy is to diversify and grow. I think everyone in this room has a positive view of the gold price, but we don't control the gold price, and so a way for us to improve our valuation multiple is to bring new assets online, optimize our portfolio, and get a better multiple. Diversified large companies in this market get a better multiple than illiquid small developers. A quick snapshot of the strategy here, and what we're trying to show is that Aris Mining has existed for less than 2 years, but we've done a number of deals, and I think we're in a better position today than Endeavour was when they kicked off their growth strategy. So I think we're in good shape to repeat the success of companies like Endeavour, Leagold, as well as Yamana and Goldcorp. A snapshot of our asset base. We're heavily focused on Latin America, particularly Colombia. We already have a lot of gold in the ground, 25 million ounces in all categories. We are already a junior to mid-tier producer. We're tracking to 250,000 ounces of gold this year at midpoint of our all-in sustaining costs of about $1,100 an ounce. Our 2 producers are in Colombia, and then we have another development project in Colombia and a 4th project in Guyana, which we view as an emerging gold play. So zooming in on Colombia, our 2 producers, Segovia and Marmato, are in historic mining belts. There is a centuries-long tradition of mining. We're comfortable with our social license. We're comfortable with the community in these regions. Soto Norte is possibly the most valuable asset in the company. It's less well known as a mining region, but we're planning to take our social license that we've garnered over decades at Segovia and transport that way of doing business to Soto Norte to get that impressive asset permitted. Segovia is our ATM machine. It's been in production for over 100 years in one way or another. The 2 most important things to know about Segovia is it's got a very stable cash flow profile, and that is why a company like Aris can have $300 million of debt out at a 6.8% coupon. So it's a wonderful funding tool as we grow our business. Secondly, it gives us a chance to prove ourselves with the community, to invest in the community, and create a framework to deal with the artisanal small-scale miners, which are very prolific in Colombia. So it's a foundational asset for our business. A quick plan view of Segovia. Segovia is very high grade. It's a mesothermal system. Over the last decade, it's averaged around 13 grams. Generates a lot of cash because of this grade. And so we're currently feeding a central processing facility from 4 mining areas. That plant has recently been expanded from 1,500 tons a day to 2,000 tons a day. And then late last year, we commissioned the polymetallic plant. And so that allows us to recover zinc and lead, which we were previously throwing on the tailings, and that should generate another $6 to $7 million a year and further help lower our costs. If there is a knock on Segovia, it's the short reserve life. So This is not something that bothers us. We have a long history with this asset. Our predecessor company, GCM, have been here for a decade. And as you can see on the chart to the top right, we've replaced mined ounces with reserves and resources every year for 5 years running. We actually released our 2022 reserve numbers this morning, and again, we've been able to replace mined ounces. What we do like is the stability of the asset. So that grade has driven a 50% operating margin for the last 5 years. So we expect to continue to be operating at Segovia for decades. Stepping back, looking at the regional picture, so we're mining from 4 vein areas. There are 30 known veins on the property. So this is the kind of asset when you drill, you find the gold. It's just we're prioritizing cash flow and production. That being said, this year will be one of our biggest exploration spends. We expect to have a budget of around $18 million at Segovia this year. A quick word on the artisanal small-scale mining. So the way this works is we sign agreements with local cooperatives. Aris provides geological support. We manage the explosives. We take control of safety, and we partner with these artisanals and process their ore through our mill, which means we contain the effluent. So that's a win for the community because we protect the environment. You now have 3,000 individuals who are taxpayers. The government can collect their revenue. So it just tends to be a very stable business model. It's gaining a lot of traction. 5 years ago, we had 1 contract. Today, we have 68, again, representing 3,000 plus people. We've got a lot of material on our website that explains how these agreements work. But you have to do this to be successful in Colombia, and this is key to our social license in the country. Our second asset is Marmato. We are currently producing at the upper mine, which is a epithermal system sitting on top of a big porphyry that was discovered a couple of years ago. We're not there for the small mine. That's in production right now. It will do about 30,000 ounces. We are going to develop into the porphyry and turn this into a modern bulk tonnage underground operation. What we like about this porphyry is it's big, it's wide, it's continuous, and it's low capex, and we're already on site. So it's more of a brownfields expansion than truly starting from scratch. We recently updated the PFS last year, so these are fresh numbers that captured all of the capex inflation in the sector. And I will point out construction capital of $280 million is less than our cash position, never mind our streaming agreement and ongoing cash flow. So we can fund this one very easily, and it will turn Aris into a 350 to 400,000 ounce a year producer. So in my mind, this is the biggest catalyst for this company. Something else we like is the mine life. So the PFS outlined a 20-year mine life. That is on a 3.2 million ounce reserve. Total on-property resources are over 8 million ounces. So my personal opinion is that this is an asset that could run for 3+ decades. And like Segovia, very low cost, so should keep us in the lowest cost quartile amongst our peer group. Our third asset in Colombia is Soto Norte. Soto Norte is one of the gems in the space. It is capable of producing 450,000 ounces at very low all-in sustaining costs. The drivers of the cost are grade. So you're talking about a reserve that's grading 6 grams gold, an ounce of silver, and 0.2% copper, and you're mining that at 7,000 tons a day. So you have scale. There's not a lot of capex development. Once you get into the zone, you can see it's very compact. So it is a very, very profitable asset. We are currently a joint venture partner, earning up to 50% with the Sovereign Wealth Fund of the United Arab Emirates. For those of you who've been in this space for a while, you'll probably remember the history of this project. It was discovered by Ventana Gold in 2006. At the time, this was a TSXV penny stock that went from 10 cents to $13. It was eventually acquired by a Brazilian billionaire, Ike Batista. He then brought Mubadala in as a funding partner, and when he ran into his legal issues, the project went back to Mubadala, and they quickly realized that they could benefit from a strong, experienced mining partner with relationships in Colombia. So they ran a process. We were able to acquire half the project, but I really like this slide because I want to point out that the project has already attracted over $2 billion worth of capital, and most of the analysts kind of carry this as option value. So a wonderful free option on our ability to get the project permitted. So on that, why is Soto Norte sensitive? It really comes down to the location. So the green area is the Paramo. This is a conservation area. It is defined by a topographic altitude line, and above that, it is considered a sensitive water reservoir for the country's drainage system. So mining is banned in the Paramo. We are outside of the Paramo. Secondly, this is going to be an underground mine. In addition to mining underground, we're going to put the primary crusher underground. We are going to build a 7-kilometer access tunnel with a conveyor belt. So all of the dust, noise, vibration that would usually be on the resource is going to be non-visible underground. And when the ore pops out 7 kilometers down slope, we're next to more of an industrial area. We will then build a dry stack tailings, so no risk of a tailings pond failure. And we will recycle water, and of course we will not be using cyanide or mercury. So this is a very expensive way to build a mine, but it's the right way to build this mine. As an analyst flying around looking at 100 plus projects, I've never seen anything this small footprint. So we're excited about this design, and this is what is going to inform our new permit application. The final thing I'll say about Soto Norte is if you look carefully at this image to the northeast of Soto Norte, you can see some white disturbance on the SAT image. That is a contingent of small-scale miners that have shown up in the last 5 to 10 years. They are currently basically mining the Paramo. They do tend to use mercury, cyanide, more traditional processing mechanisms, and that's not great for the environment. So one of the value propositions we can make as a Canadian/Colombian company is we can work with the local miners. We can show them it's profitable and potentially start to transport this ore to Segovia. So that's our plan for getting Soto Norte permitted. We're not going to rush it. I think this decision is 2 to 3 years out, but I think wonderful option value given the market doesn't really credit this asset. Our fourth project, and the one we know the least well, is Toroparu in Guyana. So this came in with our GCM transaction. It's currently at a PEA stage, but what we like about it is it's big, it's advanced, and we think Guyana is a great place to do business. Previously, Guyana's biggest challenge was infrastructure issues, but following the massive discovery offshore by Exxon, you're seeing the government and private enterprise put in a lot of infrastructure. It also doesn't hurt that Zijin is down the road at the Aurora mine, so they've been responsible for a lot of regional infrastructure as well. The only compliant study on Toroparu is a 2021 PEA that showed a long 24-year mine life and an asset doing 225,000 ounces a year. As the new owners of this asset, we are focused on a review. So we've cut expenditures, we're re-looking at the resource. We like to build our assets, and so we really need to make sure we understand the geology, the structural controls, and then potentially look at rescoping this. Maybe it should be built larger, maybe it should be built smaller, but we're doing that internal work now, and we're looking forward to giving the market some more guidance in the near future. We also have a project in our backyard here in Canada, in the Abitibi, the Juby asset. This is not a focus for us, but in the right market, we might look to find some value for this. Comparable companies on the TSX with a Juby equivalent open pit resource are fetching a 70 million market cap or so. And again, I would argue that the market's giving us zero credit for Juby. I think accounts are surprised when they see this slide. We almost have as much gold as Eldorado. We've got one of the best balance sheets in the space, and we have really good near-term growth. So we're a growth story in a sector that is seeing these growth companies mopped up and consolidated. Looking at the ownership, there is a lot of retail ownership, but I would flag that the board of management owns 6% of the company. That's a big dollar value, close to 40 million, and we paid $4.50 a share. Our stock's at $4 this morning, so if you buy the stock today, you're making money before we do. I think it's rare in the gold space to have this level of ownership, I think it sets us apart from peers. And in terms of analyst coverage, Red Cloud does a great job. Thank you to those guys. And we've recently expanded our coverage to 6 analysts. So I think we're getting the story out there and starting to show up on more comp sheets. We aren't a household name amongst the resource institution yet, and we're hoping to change that soon. There's the board again. You might know some of these characters. They do not need an introduction. I would like to highlight Monica de Graaf. So she was the Minister of Justice in Colombia. She ran the power company at the same time that the current president was the mayor of Bogota. She is a intelligent, connected woman, and we're very privileged to have her on our board. And I think the highlight for Taylor and some of the analysts coming to site was getting a chance to meet Colombians, to meet the Colombian representatives of our board, and understand all of these political issues, because they're nuanced. They don't always come across in a 30-minute presentation. But I think anyone who's curious about what's going on in Colombia would be well off chatting to one of the analysts who came to site, including Red Cloud. So in a nutshell, we're a growth company. Our management team is proven. We're invested ourselves. We've got a solid balance sheet. The last thing you want is for gold to rip and the company you own to double the share count. We're not going to do that. So I think there's a re-rating opportunity here for Aris Gold as we start to become more of a household name.